This is a big picture update on the stock market, and there are signs of a bear market. I know everybody is used to many years of the market coming down and then roaring right back up, but the stock market got to incredible valuations at about 207% of GDP, and that was excessive, and that was based on a ton of stimulus that came out of government spending and a period of extremely low interest rates during COVID. And I believe that that set up a period of a significant correction coming. And now there are signs of that. I'm going to show you our proprietary applications looking at longer term studies, and then we're going to be looking at longer term charts, and you're going to see where I'm getting the idea that there's a reason to believe that a major top is likely forming. That doesn't mean we won't have very good rallies in the middle of this after this decline is over with, but I think they're going to be stopped short, and then the market will run into trouble again. And I'm going to show you why as we look at our applications first. So let's take a look here as we look at the Slimulator Momentum Tracker. This is a longer term application that we have, and you can see in here it looks at an investor period in here, looking at 3 months out and longer. And I have it set into our focus list right over here so that you could see. I want you to see the particular stocks that are extremely bearish, we call them very bearish, and the ones that are still holding up that are pretty bullish. So I'm going to scroll through this slowly so you get some idea. And what you have in here is our a directional bias output right over here on our focus list. And then it gives you long-term, intermediate, and short-term. And it builds an algorithm out of this and then tells you what the overall directional bias is. In our whole list of stocks that we have in here, you can see right now that about 51% are neutral, 26% are still bullish, 23% bearish. So you can see we're pretty much in a neutral look in here when you look at that for the overall market. However, that comes from what was a very, very bullish condition, and this is a very big deterioration that I'm showing you. So let's take a look in here. You could see Applied Materials, Toll, AMD, Micron, Microsoft, XLK, which I'm going to show you that monthly chart a little bit later, FDX, FCX, XBI for solar, XLF. The financials are now slightly bearish, and those were just driving the market on the upside. Even Newmont, under this condition of gold going up, is still slightly bearish for the long term. It is improving. However, it just shows you that an equity is an equity, even if it's tied to a commodity. And if they have to sell out equities to raise money, well, they'll even sell the commodity stocks like Newmont. You can see Google in there, slightly bearish, Caterpillar, the semiconductor stocks, and that's all of the ones that are in this group that are slightly bearish. Now remember, this is 3 to 6 month outlook, really, so this is a longer term outlook right over here. If you want to know the ones that are bullish, the ones that have been holding up, or the ones that have been rotated into, we talked about the rotation into China, we talked about the rotation into the European stocks over weeks and weeks in here. And if I switch this over to look at the very bullish ones, remember, you can see all of these situations over here, long-term, intermediate, short-term. And you have China, you have the top 50 stocks in Europe, you have GDX, which is very bullish. And you can see in there, Apple is still bullish when you look at that. McDonald's, Baba, which is a Chinese stock. Deere is holding bullish. Netflix still holding bullish for the long term. But you can see in here the short term turned negative, so it's not very bullish anymore. But there are still, a decent amount of longer term buyers in there that's showing. Starbucks, T-Mobile, that's a good look at the stocks in here that are bullish. So I wanted to give you a good idea of looking at that. So I have it set up right now, looking at this particular group, which is the focus list in here. And there are lots of focus lists that you can see in here. You can look at the individual groups when you look at that. Let's just look at the XLK really quickly. And these tech stocks, of course, are leading the way down. And you still have IBM bullish, ROP, Cisco still bullish. Apple, as we said, still bullish. VeriSign bullish still. And if you look in here at the ones that are very bearish, you can see that these semiconductor stocks and some energy stocks and solar stocks are very bearish. And these are longer term situations. So the ones that are very bearish are the ones that probably have been quite oversold and will get a bounce. And you can see these are stocks that are very, very bearish when you look in here. Synopsys, Micron, Autodesk, Microsoft. Just a look at the very, very bearish stocks that are in here. And these stocks get a rebound, they're very likely to fail. So if you're looking at stocks like that, that gives you a good sense. I'm going to take it into the mode where we're looking at, let's just look at SPY here on the monthly, and I can show you the deterioration in here. We'll take the single stock symbol of SPY, and I'm going to blow this up, and I want you to see the chart in here because you could see the deterioration. Now, it's still slightly bullish to neutral. In other words, there's still enough of that long-term buying that was in there that keeps lifting the market up, but not in very good shape. And you can see how it works in here. You go back over here just about, this is about 6 months, and you could see that it kept you bullish in here, positive, positive. The dark greens are very positive right here. And now you can see in here the deterioration that has gone on as it went to just slightly positive over here for the longer term. And this is likely pretty soon to lose this long-term strength that you have right in there, which might take some weeks yet, and then we'll get some sign that it is negative. But we've had a deterioration in here in the conditions as you went from very positive to only slightly positive to neutral that you can see right over there. So we've had this deterioration here in the SPY. If you look at something like the XLK in here, which is, of course, the tech stocks, you can see in here how very bearish that is. And if you look at the chart in here, you can see what happened there as it went from conditions that were quite positive. Let's just bring this out right over here to this positive to mixed to neutral. And look what happened right over here up near the highs. As this started to get very negative and remain very negative. And here just had a little uptick to neutral, and now we're very negative again. So the conditions of the tech stocks are just really bad, and these are the leaders and the widely held, and the reason to believe that the market is going to remain in some trouble when you look at that. I kind of want to look at some of the other proprietary indicators in there just so that you get some sense of the things that we look at for the longer term and even for the intermediate term. So let's take a look here as we look at our equities hub right over here. This is our equities and ETF hub right here. And if you want to know what the conditions are, the individual stocks, you can see the colors in here, which gives you the cycle conditions when you look at that, and you can look at the individual stocks with our analysis in here. So this is how they're laid out in these stock grids, and you can get an idea. Let's just take a look at the let's say applied materials right over there, and you can see that our charts are right over here. You can look at the daily chart, or you can look at the weekly chart or the daily chart that's in there. And this is a great way if you want to look at all of our indicators in here. But I love that this is colored, so you really get a good sense for that. Let's take a look here at our charts hub right there, and you see Apple here. You can look at the weekly, you can look at the daily. Applied materials weekly and daily right like that, and if you want to blow the daily up, you can do that. So you can see in here AMD, and you can see this negative cycle right in here and the negative conditions on the weekly and daily. So you can get a good look at the stocks, all of the symbols that we have, as you could see right in here. And this is a great way to scroll through our analysis right there if you want to get a sense for these stocks that we look at. Remember, we said that Deere was a stock that was still positive. Well, look at that right over there, as that still looks positive. You can see on the daily, it's just coming down to a corrective, end of a corrective period right over here, and potentially going to turn up right in there. So a good look at how to use this, and if you want to get a look at any of our stocks in here that are interesting to you with our analysis in there, you can do so. JP Morgan as a bank stock, of course, and look at how that moved below the important cycle though right over there, and now this is a bearish stock. So we're looking for a little bit of an uptick in here and then moving to the downside. You could see the daily with a breakdown of that level right over there and a likely upward turn right here. Yes, we're looking for a bounce in a lot of stocks right now, but this is how you can get a great idea of our analysis in all of these stocks, and it's so easy to scroll just like this. You can do that. So that's the Charts Hub. It's fantastic. I want to go to the rankings indicator because while we're looking at conditions that are extremely bearish in my opinion, you can get a great idea for the outlook in our focus list. But the reason I wanted to come here, and this is a 3 to 6 week outlook, and you can get a good sense for the ones that are still bullish or the ones that are very bearish right there. I want to go to the OBI because just a quick way to look at this, the stocks that are likely to bounce. And I'm just giving you a really big picture in here when you look at that. And here you can see anything that's a P1. And I'm going to scroll down. N1 negative right there. This is extreme oversold condition. So it says that Apple, even if they're bearish in the longer term, these are the ones that are likely to bounce and give you selling opportunities in here. Apple is still a decent, strong stock where the directional bias is neutral in there. But these are right over here, the ones that are very oversold, are Amazon and Boeing and CRM and Disney, Google, Goldman Sachs, Home Depot. Wow, so many of them in there. JP Morgan, Morgan Stanley, Microsoft, NVIDIA, Oracle. These are stocks that are really likely to have pretty good bounces in there. XYZ, that's Block, Tesla, UAL. I've never seen so many extreme oversolds as we have right now. SMH, XLF, XLI, XLK, XRT, SPX, NDX, RUT, heating oil, the dollar. This is incredible. Every one of these that are N1 are set up for some bounces right now. So I wanted to show you that. The OBI is a fantastic indicator. Just gives you a great idea how to set up your option bias positions. So I wanted to show you that even though I'm going to make a bearish case right now, looking at the monthly charts, I wanted you to see how there's a whole bunch of stocks in there that are likely to get a bounce. And because the ones that have been so negative, they're likely to give you very good selling opportunities. And I'm going to show you why, because we're going to move into the analysis of the stock market pretty soon. This is the market condition monitor right over here. And this is a great way that you can get a good read on individual stocks and their conditions. And I'm going to come back to that because I wanted you to see all of the applications that we have in there. So that's the start of this big picture. What I've showed you is that the conditions have really deteriorated on a lot of things on on the conditions, and they're really at an extreme right now and likely to get a bounce. But I'm going to show you when I look at the monthly charts why I think those bounces are going to fail. So I wanted to set this up that, yeah, there's likely going to be a pretty good rally coming up in here, pretty good bounce, and yeah, it's likely to fail and continue to move to the downside. And I'll show you that as we get into the monthly charts. Before I do that, everything I just showed you in those applications, you can have that on our special level 3 offer for first-time subscribers or people that upgrade. You're going to get our education and analysis and support for swing traders and option traders and active traders, and no special software needed to get a lot of what I'm going to show you, what I just showed you in there. That's all of our applications that you can get. And this is 35% discount. That's total of $232. It's only $77.33 a month versus $119. And you can get information by going to write to Matt at askSlim.com for that. This is everything that is included in there. It includes over 1,000 videos and all of the teachings that we do, access to Discord and contact with our analysts, and everything that you see here, including everything that's level 1, 2, and 3 that you're going to get. All the applications I just showed you. Just go up right over here to the top of the web page, and you will see our offer, 35% off. Click on that. It'll give you information there about this offer, and then you'll be able to sign up with a link over there if you want to do that. All of those applications I just used and showed you, I think are great. Now, let's get into the monthly charts. The reason that I'm so concerned about the market having topped, we're going to look at the monthly charts in VIX, SPX, NDX, and XLK. Yes, the full show, and those of you that are just watching this clip, on the full show coming forward here, I'm going to show you the intermediate and short-term analysis. I'm really looking at the signs of a bear market now when I look at this longer-term analysis. As I showed you on our proprietary indicators, a lot have been losing serious momentum, and a lot of stocks we look at really have deteriorated to quite negative, with potential bounces, as I showed you, that need to be sold. So let's take a look here as we switch over now and look at charts. I'm going to start out by looking at the VIX. This is a chart our members get all of the, I show them our weekly and daily all of the time, and this is the monthly. Now this goes way back, and there's just an amazing rhythm in here of volatility, and it shows you monthly. Remember, these are big pictures. So this goes all the way back to 1994, debt crisis, and the just get my pointer, the debt crisis there, long-term capital management, the 20,000 to 22 bear market, the 2008-2009 bear market, the debt ceiling crisis, the Greek debt crisis, the pandemic, all of that. It gives you all of those things, and look at the magnificent rhythm in here. This on the bottom are cycle brackets. If you're brand new, that just is a guide for us to see the rhythms in the market. And of course, each one of the upside spikes that you see are big declines in the stock market. These gray ovals tell you when you're getting into the period where the market is likely entering a long-term problem period. You can see that right over here, and of course 2020 gave you that great big break in the stock market and that pop right there. And if I just zoom in, you can see we're in this period where periods of higher implied volatilities are likely going to be with us for months and years. There's going to be times when the stock market does okay and implied volatilities come down, but we saw it begin to get elevated in here, and warned that we were in a time frame where the stock market could correct. And now we see, of course, the stock market falling, implied volatilities going up. Why do implied volatilities go up? It's because there's a demand for puts. People need to buy puts, either because they were short puts or because they want to hedge portfolios or they're speculating. Any of the reasons is the reason they buy puts. So as the demand for puts go up, so does implied volatility. And or the inverse of that. It's kind of a chicken egg thing. And then you get these higher periods of volatility. We're very likely to be in an extended period of high volatility. So now what I want to look at in here are several other charts. We're going to look at the SPX, the NDX, and the XLK, just so you get an idea in here. Because XLK, because this is the tech stocks that are so heavily weighted in the market, and they drove the market up as it got to insane valuations, and now they're giving up huge amounts in here, and there is some trouble. So let's look at SPX. This is the monthly cyclical chart, and you can see in here, this was the breakdown in here into 2022. It was 27.5% right there, and you could see the cyclical rhythms that are in here. So this low right over here is a little shifted off of that low. This is spot on right over there. And if you look over here, you can see those lows are pretty much spot on. Each of those stars tells you how many cycle rhythms, in other words, which money flow is coming into that time period. When you see 3 of them, it designates that the intermediate term holders, the longer term holders, and the monthly holders, the ones that are like investors, they all began to liquidate in here, and when they were done, it began to move up. That was 2016. You could see the same thing that happened right in here. Now you see that green oval right over there. Let me just come in a little closer right over here. This is our reversal scout. This is our monthly reversal scout, which is magnificent. You can see in here where it first turned down in early 2022, it warned you that the selling was coming into the market, into these 3 lows right over here, and then the market got sold off 27%. Once it was over with and the reversal scout turned up, that told us, well, we're in this period of all 3 of these categories of holders or traders having positive money flow conditions. In other words, they're putting money in the market right over here. Look what just happened this month. Our reversal scout turned down, and that's telling us that this declining period is a problem. If our members saw my year-end analysis, and that was telling them that I felt that the high in the market was going to be somewhere around 6175, 6200 for this year. I think the high the year is in right now. And as this turned over and this bear market period in here, or correction, because what we said was that the period of risk was early 25 through mid 26, and that's this right in here. And because this turned over, it tells us there's a high probability that this is a period where we're going to get selling overall in the market into somewhere around mid-26, give or take a few months. So it's, first quarter to third quarter of 2026. And this downturn here is a warning. Now we have a repair level right over here. So if the market got over this level right there, we'll call it around 60.15 and closed up there, that would warn us that the negative analysis had changed. But that's, some 400 points, which isn't all that much when you think of it in terms of the S&P. So that's our warning level, and that would tell us that the market had digested it and corrected and turned more positive. I make that a low probability, but still we want to talk about it because we could always be wrong. Right now, I'm showing the warnings that says that the period of risk has started and that rallies that come out over here are likely to be sold and then come down again. This level right over here is for around 48.15. This level right over here is around 51.30. In the S&P 500, those are our targets right now for the S&P 500 into mid-2026, as long as this level here is not taken out, which I think it's, again, a low probability. If you look at the NDX over here, you can see the same thing. Let me just get that analysis up here. And there is the monthly analysis there. And you could see the reversal scout as it turned up right over there, turned down right over there, and the same thing over here. It's turned down. We've gotten a bigger decline now in the NASDAQ than we had in the other indexes. And right now, for this period of mid-2026, the target is around 17,700 to 16,300. That's where those support levels are. We're coming into an area of minor supports right now. And if you watch the full show, then you will see that there is a likely bounce coming in the stock market. And I just showed you all of the oversold stocks for that bounce. And then after that, the market is going to have some risk into June this year. And I'll show you that if you look in the show later on. This is just what I want to show right now is the monthly chart. So you could see how where there's danger in here, where this reversal scout turns down. You have that big decline off of the shooting star, these high waves or candles that you see right over there, wicks that you might call them, where selling was coming in that level. And the repair level here on this is around, we'll call it 21,570 or 21,600 in that area. If it could get back over there, then the negative scenario will not be in existence anymore. It will be better. And probably the reversal scout would turn back up, but that's a low probability for that to happen. So that's another reason we believe it. Now, the market leaders, of course, as we look at the XLK, you can see that right over here, and you have the exact same thing going on in the XLK, where you have that downturn, as you see right over there, the downturn there, and that's pretty much the message that you get. This says here that the cycles point out, of course, into 2026, and maybe there's a bigger bear market out over there into 2029 or 2030. But that's a little too far to look out. Let's just right now just say we are getting some serious warnings in here. And you can see again these wicks or high waves right in there, and this warning that the market is going to have a very hard time going forward as you have that downward turn in those charts. So I wanted to show you all of that information as you see that there are very negative signs that we're seeing in here. You see where that could be improved if you get above certain levels, but you could see the amount of selling that's going in right now. And the market is pricing in a much lower earnings for stocks due on a period of austerity that this government is putting this economy into. Whether you believe it's right or wrong, it is happening. And the government is being made smaller. Spending right now is not coming down yet, but it most likely will. And those things that supported the economy and supported these stock prices were essentially pumped up. And now there's some normalization that is going to go on. And the likelihood is that the stock market has entered a period where it's going to have a lot of problems, and that the declining sectors that we're seeing right now are where it's in the big declines are in the tech stocks, with some really giving up huge gains, 30 or 40 or 50%. That's likely to spread into the rest of the list later on, but right now we're just going to look for a bounce and a selling opportunity because there are signs of a bear market.